What's up, Santiment family? Welcome to one of our final videos here of 2021. It's December 29th, late night here on the Pacific time zone right now. And I thought it would be a good idea to go over how circulation and MVRV are looking, considering they're two of our most powerful leading indicator metrics that we offer. And we also have two really nice Sandsheets models that our Sandbase Pro members can access freely to really see where things stand in terms of super bullish to super bearish or anything in between. And I'll jump into those after going through um, some basic updates on Bitcoin regarding these two metrics, beginning with circulation, which is, of course, the amount of unique tokens moving on a daily basis on a given network. In this case, Bitcoin's amount of unique tokens are looking a bit down. Obviously, the high point was right here around late November, early December. We even had a few outliers here right around the Thanksgiving time before that initial big drop started to send some, well, I guess I shouldn't say initial, but after some encouraging signs here, there was the big drop off around Thanksgiving that sort of sounded the alarm bells, followed by a big bounce. So circulation was rising as things were getting polarizing around these areas. Big drop here earlier where everyone was buying the dip and speculating. And then the much bigger drop that kind of gradually sent circulation down a bit. This pink line here, if you can't tell, is basically a 7-day smooth moving average to indicate where things are looking without quite so much noise and weakens like these low bars here kind of drop things off. So long story short, Bitcoin circulation looks okay compared to where things were over the previous 6 months. If I were to put like let's say I put just a 200-day moving average, let's go 50. Yeah, that's a little better. So you can tell over the 50-day moving average, we're still on a clear upswing compared to where we were when things were getting pretty dicey in July, August, September, and tons of volatility was going on. Of course, we're still back below 50K once again at 46.7, excuse me. But circulation compared to where it was when things were around 46.7 in mid-September, for example, actually looks a lot better. And you can tell by this pink line. So keep that in mind. Even though things have flattened out, let me get rid of the 50-day here. With this pink line, even though things have flattened out, keep in mind that it's still relatively good compared to where things were in the, summer to early fall months. It's just not quite where things were in late November, early December. And on that note, we can look at how NVT is looking. NVT, the way we calculate it, is taking the market cap of an asset and dividing by the amount of unique tokens circulating on the network on a daily basis. In this case, we've macroed things out a bit to make it kind of a monthly view, where red, as you would expect, would be the most bearish, bright green would be the most bullish, and then everything in between is pretty intuitive, semi-bearish for orange, neutral for yellow, yellow-green equals semi-bullish. So for the third straight month, it looks pretty likely that we're going to close out in semi-bullish territory where it's below all of the recent month trend lines, 6, 11, and 16, but it's not below the all-time high or just all-time NVT line, I should say, rather, which would mean that it's actually in super bullish range. That's the way we've set it up, back tested it quite a bit. Things are quite accurate if you look, at the long stretches of red here, long stretches of red here, things booming when things turn yellow, green, or green. So we like this Sandsheets model quite a bit and think you guys would really enjoy it if you're more interested in kind of the long-term plays for Bitcoin, whether things from a zoomed out perspective are looking healthy and justifiable for where the market cap is according to how much utility those unique coins are getting within that given network. So this basically reflects what we looked at here, where circulation has kind of flattened out compared to here, but price has fallen off too. So the ratio has stayed kind of the same. The market cap is lower than it was in November, obviously, when we, of course, had that all-time high. Um, but of course, with prices lowered, it's okay for circulation to be a little lower too and still get a nice justified semi-bullish uh, divergence like we're seeing right now. Keep that in mind, and we can move on to some others really quick. I won't go back to Sandbase and show each chart's circulation, but I want to show how Ethereum looks here, which is quite interesting to me. Every single month since June has shown a semi-bearish divergence signal here in yellow-orange. And that's quite interesting to me because obviously price has still been able to climb higher, but keep in mind that every one of these, except for Bitcoin, is going to be reliant a little bit on what Bitcoin's doing. So usually if myself or one of our Santiment community members is looking through the charts here and wants to check out, Ethereum or MATIC, Litecoin, whatever, also keep in mind how it compares to Bitcoin at any given time. So, Bitcoin was climbing itself despite some bearish divergence before seeing a really sharp drop off, quite interestingly. And that's always going to relate to how these other ones are looking. But from a very macro perspective, if you're on kind of a 6-month timeline before you make any moves, this would tell me that Ethereum is a little bit dangerous right now with the amount of unique ETH moving from address to address on a daily basis. So, with prices climbing in spite of the fact that there was a neutral or better signal, that means that when there is a drop off, it's likely to be drastic because there's not enough circulation to really prop it up for the long term. Once we start looking like this again, which always happens in the history of cryptocurrency, not investment advice, of course, expect that that's when things blast off. You can tell historically when Ethereum gets into the green zone and it's below all of these trend lines here, that's when prices just tend to absolutely blast off. Blasted off even on these 2 months. And then, of course, the long stretch here from mid-May, right after Black Thursday, all the way up until basically the first orange one when we had that big correction. So Ethereum looks a little less than ideal at the moment. Keep that in mind. MATIC obviously has looked really good, hit an all-time high, I believe, less than a week ago. So it's actually in bullish range right now. Just keep in mind that this is due to a lot of reaction from people trying to jump into an asset that's been getting a lot of hype and hit an all-time high recently. So it could be a bit, take it with a grain of salt and just understand that this is going to relate to how Bitcoin and, of course, Ethereum is looking, with MATIC being an Ethereum-based asset. Litecoin, of course, is not an Ethereum-based asset, but still will be dependent on Bitcoin's price to an extent. Notice that for the 4th straight month, it's actually in a very comfortable position circulation-wise. And the last couple days, if you look at these hash marks that show 1-day and 2-day here, these are basically the last 2 daily circulation points. And the lower the hash mark is, the better, meaning that it's actually beating the average for the month of December right now and looking pretty darn good. So keep that in mind for Litecoin. It always kind of has a bit of a mind of its own historically. And Litecoin is also known to be an asset that can very often be a leader into what Bitcoin does next, because of course they're both Lightning Network origin stories, if you will. So keep in mind that Litecoin is looking quite strong right now, really the most strong, dating all the way back to December 2017 in terms of token circulation. But of course, token circulation is one of many metrics. So keep in mind that, whales are going to factor in, daily active addresses, MVRV, which we'll get to in a second, lots of other things. The last asset I'll show on the NVT chart here, to give you people who don't have access to it a little bit of a freebie, would be Chainlink. And Chainlink's been in an interesting spot where right when it hit that all-time high back in May, about a month after Bitcoin's all-time high, in the same month that Ethereum hit its all-time high. Yeah, I don't believe it surpassed that May one yet on the Ethereum side, but it definitely hit for Chainlink in May. And we can see that right when things turn neutral, boom, you see this big retracement. Obviously a bit of a climb. Anything can happen during yellow and even orange. But when it's not green, that's when you're going to see a lot of volatility. And Chainlink has been struggling in that respect. So obviously there's a very big Chainlink fan base. We see a lot of commentary anytime something significant fundamentally happens with Chainlink. But right now, um, it's a bit of a struggle for the Chainlink traders, not just for price purposes, but because behind the curtains, there appears to have been a pretty decent sized drop off in unique link moving from address to address. And of course, that and the amount of active addresses are two of the main keys in terms of utility and the amount of usage an asset is getting, which ultimately is what pumps a price in almost all cases. So that being said, we touched on 5 assets here for NVT. I showed you Bitcoin in a little more detail over on Sandbase. As far as MVRV goes, I'll keep this a little briefer if I can. MVRV for Bitcoin is looking good. In case you're not familiar with the way the metric works, you're looking at the uh, average returns of traders for the last, in this case, 30 days, but we have other time frames you can look at instead. We like 30 days because it's a nice kind of hybrid between super long-term trade opportunities and super short-term trade opportunities. And a lot of swing traders really enjoy seeing, the 30-day MVRV and whether it's giving a super bullish indicator or super bearish indicator. Right now, I'd call this a decently sized bullish indicator because we are below the 0% line. The lower it is, the more traders are in pain. And if you've followed many of our videos, traders in pain are the things you want to look for to enter positions. You can see right here very clearly, one of the lowest MVRVs at the time was on July 19th, and that was exactly when the bottom was. And all of those people who were in pain and selling because they were around 10% underwater on their 30-day investments, they got hurt a lot if they let go of their investments because the price went on an absolute tear, jumping, it looks like 76% from that point where MVRV was at its lowest. Another point here, look how low MVRV got, all the way down to negative 13%. Instant skyrocket over the next month and a half or so. Alternatively, look at how these high points eventually led to a correction. Obviously, the correction happened when MVRV was pretty high, but not as high as it was here. This was kind of an anomaly where the price kept on climbing despite the fact that traders were euphoric and very profitable during this time. But eventually, when you see these big peaks, there will always eventually be some correction or at least some event that will get people to FUD out and take their profit and get the MVRV closer to 0% or negative again. If I look at well, before I do, where we are now, we're at about negative 6 point, actually it looks like about negative 5.6%. 0% would be neutral. Negative 15% is around the time things become really, really bullish. And it's almost always a good buy time if it exceeds that. And it's almost always a decent sell point if it's above plus 15%. So I can show you, let's say the last 5 years of MVRV data for Bitcoin. If I were to average all of these out for a long period of time, they're pretty much going to be right around 0%. All of the high points and low points. And that's because there is always kind of a zero-sum game, even in crypto. It may not seem like that, and everyone's on the same side trying to, wish their way for crypto to go up and make everybody rich and give them all Lambos. But there are an equal amount of buying trades as there are selling trades, at least in terms of monetary value. May not be an equal amount of winners and losers. There's actually, I believe historically, a lot more losers because people are buying a lot more when prices are on the huge rise right here, and then selling a lot more when prices are on the huge decline like they are here. But all things considered right now, Bitcoin's in a better spot than average. historically for buying. But just keep in mind, this isn't really a danger zone. As I mentioned, those negative 15 and plus 15% levels, something like below here, these are like the historic, like really solid buy opportunity spots. And these are the historic, let's see if I can get 15%, really dangerous spots where it might be a good idea to take profit. So look at how, this last one matched up quite well. There was, of course, one more bounce that went higher, but you certainly wouldn't be too unhappy if you sold during this danger zone right here. Even right here, I mean, you were in a pretty good spot because of the big bounce that happened here. But this very last MVRV spike, where it was at about 17.3%, this was pretty close to the all-time high, and it was already over 60K, and we're of course back below 47K now. So I think MVRV is a very valuable metric, and that's why we have a sand sheets model here that gives you a little easier way to digest everything and quickly just understand, based on many different time frames all combined together, whether something is in a very risky spot or very opportunistic spot. And most of these assets are actually in more underbought / opportunistic spots than usual. I set this up so that the closer it is to the opportunity zone, this green dashed line, that's basically the equivalent of negative MVRV. So apologies if that's confusing, but I wanted to make it intuitive where the higher the bar is on the opportunity and danger zone divergence chart, the closer it is to being underbought and being a good opportunity. And that's why they're resembled by green bars, whereas red, which there are no red right now, but red and orange are on the opposing end showing semi-overbought. And if for some reason it's in this super overbought range below this dashed line, that would mean like it's a top 5% time where prices tend to correct, and this one is a top 5% percentage historically of things bouncing upward. So more things are close to that dashed line where things tend to bounce upward right now. Bitcoin, as I highlighted right here, shows at about 0.35 plus 0.35 compared to the normal zero line. So it's like a standard deviation, if you will. 1.0 would be like in that top 5% of underbought zones. So Bitcoin, when combining not just the 30-day, which is right here, but also 1 day, 7 day, 90 day, 6 month, and there's a 1 year somewhere in here, which looks to be about neutral. It's combining all of those together to show you what the MVRV divergence is against each of those and where it blends together on this -1 to +1 standard deviation line. A couple other ones to note, of course, Ethereum, also right on the exact same spot. Obviously, there's different sized bars compared to Bitcoin over here, but it still averages out to exactly plus 0.35 standard deviation. Super interesting there. So both Bitcoin and Ethereum on the MVRV side look like better opportunities than usual, but not in super duper like you must buy now range. Of course, this is not investment advice anyways, and you can take all of this data based on history as something for you to make your own judgment on. I'm simply here to pass that data on to you and let you make your own assessments. Things to avoid right now might be something like the Sandbox, which of course had a very good early December. And it's starting to really struggle here, which is why you see the 1 day and 7 day looking so high. But you can tell like the 6 month, the 3 month, they're looking bad because so many traders profited during these time intervals. That's why it looks orange right now. Another one might be OKB in a similar spot. MATIC, of course, has been on a huge run, just made an all-time high, but it's been correcting the last week or so, which is why you see these 1 day and 7 day keeping the average from going way down to the danger zone. Really promising potential projects could be something like 1inch, which is the only one on this chart that is actually in that top 5% underbought zone right now. Of course, remember that with all these altcoins that are in underbought zones, they're still going to relate to how Bitcoin performs, and there are so many other on-chain and social metrics that you may want to factor in before really just making an investment decision based only on MVRV here. But 1inch looks good from an MVRV perspective. Aave does as well. Another very close one to that top 5% line is Compound and Ren, interestingly. Ren had a very, very good start to 2021. Omai's Go is an interesting one, or I should say OMG Network now. We still have the slug labeled as Omai's Go, which we understand is an old slug. Uniswap, the Graph, Maker, quite a few different assets. Overall, it's clear that the trend is more so underbought than overbought right now, with the majority being in the yellow, green, or green zones. So that's a good sign. And obviously, with so many altcoins plummeting over the last week or two, this totally makes sense. And it's really just about, if you do want to buy the dips, which ones would be the most justifiable based on MVRV data right now. And of course, factor in things like NVT, daily active addresses, social volume, and overall sentiment toward different assets should always play a role in your decisions. But I just wanted to highlight those two metrics, and I really hope this was helpful. And if you have other questions, feel free to drop a message in Discord to our support or myself, and we are always thrilled to help you out. I will also have links in the bio, as I mentioned, for these two Sandsheets models, and I wish you all a pleasant final couple days of 2021. Talk to y'all soon.